Okay. Well, thanks for joining everybody. It's January 29th. That was fast.
Yeah,
Already
seriously?
2026, first month's gone.
Yes, I
All
was thinking
right.
the same thing today.
So I'm going to talk about some personal things today a little bit, just briefly. Some personal ideas that kind of relate to what we're dealing with, like with the nice gains I hope y'all have in the precious metals. But I want to throw some personal stuff in there. And just like always, for those of you who are new, check out aceofcoins.com. There's some going to be some cool changes there. You can schedule time with me. And then aceofcoins.club, we got the video series that's developing pretty soon. We're going to have this AI module functioning online. The investors are going to take a nice, you know, run with it and let us know what they think. We have different levels of investors. Those of you who came in for a quarter million shares, and this is 10 cents a share. You come in for a quarter million shares, this is yours. You get access for life. As long as we have this thing here, you have it. We just ask that you not share with people. It's yours. But anyways, that's the deal. Okay, for 100,000 shares, you get access for the whole year. You're not paying any fees. All right. Not that we don't appreciate the other investors, but we want to have some incentive, for the higher buy-ins. So, but anyways, that's the deal out there. It's still out there. As we're still going to take investors because we still want to have money. We're getting to a point where it can be released to be used. I'm going to monitor it. I'm going to interact with it before things are released for real. But then we're going to need some funding for marketing because we're going to do some real good, cool things with it. So, anyways, just a brief thing on that. And then I wanted to just we're going to get into this. A lot of my conversations on Thursdays come from what I discuss with people throughout the week. And so we're going to talk about this Caleb and Brown memo on the 1099 DA and the 1099 whatever gimmick they have over there. You guys know the game, but I just want to go over this again and just show you how ludicrous some of these comments are in the article about from Caleb and Brown on this. That doesn't even make any sense. But anyways, we'll get there. But so I've got notes here, and what I want to really get into after the Caleb and Brown thing, and then my personal notes is I want to get into the idea of what you're really doing when you're buying and holding something, okay, in precious metals. And I want to let you know that this is what I work with people. This is You're not going to hear me talk too much about it because some of the things I can't even talk about because when I work with someone in an allocation plan, I just sign a non-disclosure with them. I don't talk about what I'm doing for people, but I do have resources, and so people come to me with $500,000 or $27 million, and sometimes I've had work with people near $40 million range and just do an allocation or move money around. I have tools that I can use, people I know that you guys have never heard of before. So I just want to mention that those of you who are looking at, you succeeded at, yay, now it's time to take profits in precious metals, and maybe you have your plan and you can go for it. But if you don't, if you want some ideas or if you just want to like compare notes, certainly we can talk about that and I can share some ideas with you. And tonight, I want to kind of let you in on some of the things I look at, some very basic things. And before I get into that, I know we like to chase money. We like to speculate. Uh, those of us who buy things, we think our assets like precious metals is not really an asset, in my opinion. We're not really investors. And most investments are made with other people's money. Most of us here are thinking you become an investor when you saved up some money and put it into a deal somewhere, and then you've arrived, and that's not actually what an investor is. And I'll get into that in a little bit here. There's nothing wrong with that, but I'll get into that. So, but what I want to say early on is that, I bring this up. I made a comment that some of you may be offended, probably not. But when I'm talking to people on the phone and I'm thinking, this person needs to change his thinking on this thing. And maybe the way he's going to change it is if he changes his mindset. And sometimes that comes from what I'm about to tell you. And I think it's important because your mindset and your attitude about how you do things in your everyday, I think is important about how you're using money, your access to money, and how it's going to benefit your life. So some of you can relate to this. I mean, maybe it's going to call some of you out. I'm always called out. I like it when someone challenges me on some ideas, but what I'm going to suggest to you is this. I made myself some notes here. So my suggestion is to develop your relationship with the things you want to do in your life to make yourself a better person. This is what I'm thinking. You don't want to be comfortable for too long. So pick some things that you can just not be comfortable at when you could be very easily be comfortable. Don't be comfortable. I can tell you a quick story too, for myself, and I'm sure some of you have your stories. I like physical fitness. I think it's a good idea. There's no excuse for a man to have look like he's 6 months pregnant. I've seen this. I go out in public and I see men today, unlike 20 years ago, I see this too much. And so there's really no excuse for that. So, you just with a little bit of effort, you don't have to be like that. So that says a lot about everything else. Okay. And then it also comes into mental toughness. Some of us are on this call now that are pretty good at, they understand this, and I know a lot of you are like that. But I'm just saying, I'm just seeing that when I'm talking to people and I'm talking about money, a lot of this, I'm thinking in the back of my mind, this person needs development in these areas. I'm not saying everybody needs that here, but I'm just saying these are important things, okay? Because if you don't have your health, your wealth is nothing as well, you know. Um, you should always be doing one thing at least that's difficult. Like, for example, learning another language or just a physical exercise or something that's a bit challenging. Just pick one thing and do that for a while till it's not difficult anymore. Then do something else. This just get your mind right, in my opinion. Okay. One thing that's interesting in my household is I don't have a TV in the living room. If I'm in the living room and I've guests over or my family or whatever, we're just going to entertain each other. We're going to play Monopoly, chess. We actually have table tennis in our living room. We actually have a table tennis court that we fold up, and then we actually play table tennis in the living room. So, and it's large enough. It's not a big house. But it's large enough to where we can actually be dancing and things of that nature. So it's just, think about that. I mean, I certainly have several monitors in my house. I don't need several. I have several monitors, but in my living room, I do not have a TV. I have music, but I don't have a TV. So it's just, I do wake up at 4 o'clock mostly every morning. I don't use an alarm. If I want to get up at 4, I get up at 4. It's just if I want to get up at 5, probably do that too. So it's just sometimes there's some things I don't want to make easy. And then some mornings like right now, if it's too cold, so what? I still get up. I just make myself do it. I never hit the snooze button. It's just, I think it just makes me a stronger person just to do things like that. And also, you guys know about how I do the fasting. This is something that, sounds crazy, but pick a day where you're not going to eat anything. Instead of just thinking, what am I, where we're going to eat breakfast, lunch, and dinner today? Forget it. Just pick a day and just drink nothing, salt water, maybe nothing. Just pick a day or two, right? And just a quick story from myself a long time ago. This is how I even got into this type of service is I've always been an entrepreneur since I was 12. And when I was after high school, while I was in college, I was working at IBM and I wanted to work at IBM because one day I skipped class. I skipped a lot of class in college. I did really well in college, but sometimes I just skipped the class and I went to the library when I skipped the class and I read this book called The IBM Way. And I thought, wow, what a heck of a great company. I'd like to go work there, which I still like the company. But anyways, so I went and got a job there because I read this book while I was in college and I worked there for a few years and I realized this office had been opened. And this was a time when in the 90s when in the early 90s when uh IBM was had a service center and they were helping people with software. Okay. And so that was my job is to help people over the phone with the software. And I did that for a while, but they paid us too much money, which I didn't complain, but they paid us way too much money. And I literally, in the first 6 months of the job, I had one customer call per day. And I sat in a business suit with two desks and two computers and two phones. And I was full-time job. And all I did all day was talk to the people in the office and we played chess and things of that nature. And that was kind of the job. And so I thought, wow, this is not real. It's not going to last. And so after about 2 years, I gave 1 year's notice that I was leaving. And see at IBM, if you give 2 weeks notice, they just walk you out that same day. But they didn't know what to do with me because I gave them a 1 year notice. And my colleagues I was working with, and I trained them. I was like the second guy in that job, and I trained everybody there. So they're saying, John, you're crazy. Why are you leaving? And I said, this job is too comfortable. It's not real. And I feel good. I'm too relaxed. I need to go and get a challenge. And this is too much money and I need to go work for real. because I'm gonna die. That was my thinking. And they said, you're crazy. Well, I figured it wasn't gonna be around for long. So, anyways, so I gave my car away and I left. I took $3,000 I had saved up and I left. I went to Arizona and I met up with some people and we did some joint venturing and I ended up learning how to do this kind of work that I'm doing now. And that's how it kind of developed. And then on my way back to Florida, I said, okay, my time's done in Arizona. I created a hardship for myself. I created a financial hardship. I created a situation where I would have to bust my ass to try to get back on something. I had no idea what I was going to do. I went and got myself a mountain bike. I enrolled at a college in Arizona and I learned how to fix it and ride the mountain bike in the mountains. That was what I did. And so that's when I started this type of service right now. So then after that, which was about a year, maybe 2 years, I took whatever money I had left, and at that time I actually bought a little Volkswagen Bug, a Beetle, a Bug. I don't know what they call it, 1976 or something, 74, and I used it to challenge the right to travel. I bought this car and I didn't register it, and I went through the court system. And this is my first case. I learned, this whole in and outs, which I really look like an idiot, but that's how I learned. And so I sold that car and I took that money and I went to London for about mm, almost 3 weeks. I went to London just to see what it's like to go to a different country. And that was interesting. And then I came back and then I resumed this service that I'm doing now after I had worked with my mentor for about a couple of years. So the reason why I did that is because I was too comfortable. I knew that it wasn't last. And what happened was when I came back from London, came back to Florida, I ended up hiring some of the people I worked with at IBM because they closed the center down. So, it's just an interesting thing there. So what I found myself telling someone about the other day, because he was concerned about what I was suggesting, and he said, well, he was concerned overly, I hate to say this, but he was concerned about the consequences of what I was telling him, which many of you may have been if you've spoken with me on something, because you'll say something like, are you sure, John? Is that okay? In other words, you'll ask me, is that safe? You know, and I might say something like, probably not. But here's my suggestion: do the right thing, no matter what the consequences are. Do the right thing. So I think it makes you a better person down the road, and I think you're going to like it down the road when you go back and look at what you did. I think doing the right thing, no matter what the consequences are, is the way to go. So, but anyways, I'm going to pause for a second. Does anybody want to add anything or ask me a question? Because I'm going to get into some money talk here.
Okay. How old were you when you worked for IBM?
20.
Was that a
Oh,
cat talking?
no, on the screen right
Yeah,
here.
I think I was like 20, maybe 21, probably something like that. Yeah. Yeah, that was an interesting experience. I could tell you some stories on that one, but we won't get into that right now. But so, anyways, what I find is that people live by these certain myths. Okay, so I'm talking about gold and silver. So I really hope y'all made a bunch of money so far. I hope that you bought low and you can sell high, and you should take your profits. Somebody asked me the other day, how should I take my profits? And I say, well, how'd you leverage your way in? Hopefully you did. If you ever want to look up dollar cost averaging, right? You never move lots of money at once unless you're a government or something. So you want to buy in over a period of time, just like that. You want to sell out when you're exiting. And what I suggested this gentleman, he had quite a bit of money. And I said, why don't you just take a big chunk out now, take profits out, and then just slowly, as you see the trends, still take out more. So I told him like 35 to 50%, just take it out now. And then, because he was way ahead, and then just take the rest out. And I said, take it all out, sell it all. And you'll see why I told him this when we get into this. So the myth is this. So people believe that investments are made with cash. If you look around where you're traveling every day or interacting with people, the investments around you, the buildings, the hotels, the streets, and all, these were not made with the owners of the properties. They're always made with other people's money. It's going to be tax dollars or bank loans or something, other people's money, equity investors, private equity, things of that nature. Okay. So we're all taught, as you know, earn wages, save cash, buy investments outright, wait and hope. Okay. But of course, you're risking all your capital. So I explain when you put your cash into a deal, let's say real estate, for example, it's great that you can do that. It probably makes the deal easier. And if you should have in mind that you're going to finance that cash out later. But in the meantime, you're actually your own lender because a lender should be in that position of having put cash to acquire an asset, let's say a rental property, okay? You shouldn't be also the lender. You should be the business owner or the investor and then have a lender that's not yourself for the long term. Um, when you do this, you don't have control because you're risking all your capital, right? It's not working for you. It is a little bit, but it's not really. So when it could be out better doing for you. So that's not really investing. I mean, it's saving with exposure, really. But this is where we can start with. Okay, it's good learning. So here's how it really works. So cash is not the investment. Okay, it's a means to acquire more capital. So here's what this looks like. I tell people all the time, well, if you have $50,000, why don't you buy a restaurant? And you're thinking, well, I could buy a restaurant for $7 million. What am I going to do with $50,000? Well, 50,000 gets you access to the deal. You're not going to buy the restaurant with $50,000, but you're going to be able to possibly get financing or some sort of arrangement starting with your $50,000. In fact, you might start with your $50,000 and find someone to match funds with you to raise another 50,000, for example. Okay, so that's what I'm talking about. When you have a little bit of cash, you can acquire an asset. You don't need all the money for the asset. So cash, it does buy control, but it's not the whole deal. Assets are financed, they're not paid off. They're always financed. And you're going to get capital from banks, private lenders, capital partners. You can get it from the asset too. All right. So we could talk about those details. I've done things like funded a joint venture. Now, my work is intellectual property, but I've done joint ventures where we bootstrap it from sales. That's hard to do. I mean, but you can do it. You can do that with a restaurant sometimes. I mean, there's ways of doing that. So cash just gets you in the door, okay? Other money is going to build up what you're doing. I've got some land right now. I put money into that. I paid cash for it, but that doesn't do anything for me because I have to keep paying cash to keep it. You know, I have to pay property taxes. So what I ended up doing was I have a plan right now. I don't have a complete plan on the whole property, but I have an agent now that I'm helping her, and she's soliciting or requesting proposals from possible tenants, which are retail businesses. So that once we get that in place, then we'll have some cash flow to work with. And that should be, I don't know, sometime this year. So anyways, um, so the goal isn't to put your money to work forever. Okay. It's to use the access larger pools of capital, which is what I was just explaining. So what we have is a one-time gain, right? And then, so we want to move that to something else. We want to go from, let's see here, yeah, so we sold precious metals, we got cash, we got a little bit of leverage here, and then we want to put it into something that's going to give us a longer term stability. What the heck is that going to be? So if you stay in cash, you're going to lose ground. The longer you stay in cash, cash is on fire. You're always losing value. You know this. In fact, you saw what's happened with the precious metals, right? What do you think that looks like to the guy that doesn't have precious metals? So when you get out of precious metals, you're that guy. So you better have another asset lined up. Okay. You want to get into something that you can refinance. So I'll give you an example. This is a proposal I did recently. The guy didn't do it, but this is my proposal to him. He had a lot of cash to work with. I mean, unlimited. So I told him, I said, here is what I did the research on Florida in the marinas. And I said, if you buy a marina and you pay cash, this is an ideal way to purchase a marina because it's more difficult to get financing for the first time. However, if you buy it with cash and you get your numbers and you get a good balance sheet and you go into the asset and you make sure you got good tenants, you look at all your contracts, make sure everything's in writing, make sure people are following the rules, you got the proper insurance, right? What do you think you're going to be able to do in 18 months when the numbers look good on a balance sheet? What do you think the bank's going to do? Finance you out, right? And so whoop-de-doo, right? That's just scholastic. But what does that look like in the real world? You're out competing other people who don't understand what you just did because they're pulling their hair out trying to get financing for that first purchase when you just walked in there with you had the ability for the cash, but you're not going to stay with the cash. You're going to finance out later. You just beat your competition. And see, that's how you want to be thinking. So what can I buy with cash? What does a cash allow me to control? If you already won, right? You sold the thing that's now worth more. You want to get into something that's going to keep on producing. So let's say your net worth goes up because of this. Don't pay off your mortgage. Your net worth's going to go down. Keep your net worth up. Use debt to keep your net worth up. So here's what I'm suggesting. Let's see if I can find this here. Precious metals. Let's see. Okay. You know this. So we want to get into, let me give you a list here. You want to get into something that's going to make income, right? So I would suggest it's going to be involving real property, like property rights, like real estate. Okay. Maybe it's going to be contracts that are secured by the real estate. You can buy promissory notes. You can buy tax lien certificates. You've heard me talk about this before. I'm going to keep on talking about this because I'm not saying literally do this. What I'm saying is that this is an example of when you've made what you were expecting, something nice from precious metals or cryptos, and you get your cash, you need to go into something else. And so one nice thing to get into would be real estate notes. You can buy portfolios of notes or notes at a time. You can write new notes. Okay. There's all kinds of ways to get into real estate notes. I do direct people over to the Georgia Real Estate Investors Association in Georgia. That's like the hub of all the real estate investors and note brokers out there and lenders. If you were to connect with those people, it doesn't really cost you much money. You can connect with those people for free and you can, talk to whomever's out there note brokering and get yourself in there and you can put up 50 grand at a time and get in some notes. In fact, you can even buy on a promissory note, you can buy, let's say it's the way they write the promissory notes is let's say they'll amortize it for 30 years and they'll write it with a balloon payment for 10 years. So it's a much lower risk. And you can actually buy like 36 months out of that note. So,
You t-
you can buy a portion of a note that's already secured by real estate with your cash. So now, and you don't have to get your hands dirty. And someone's already done the work for you. He's already done all the calculations. He's looked at the discount rate. He's going to tell you what the ROI is going to be. And all he says is send me the money. And then you got the contract.
w-
So anyways, it's
no,
it's a nice thing to do when you find out who's doing that. There's portfolio managers and people that are doing these things.
John,
Yeah.
I'm sorry. What is real estate note?
So I've got a few where my partner bought some houses in Atlanta. And to make the deal work, he needed some cash. So I lent him the cash and he gave me a note. He gave me a promise that he would pay it back later. So our deal is like 36 months. So that's a real estate note.
Okay.
Yeah. So he used my cash to acquire the property and gave me a lien interest in the property, which I could negotiate if I wanted to. I could sell my note position at a discount or something. So anyways, that's how it works. It's a real estate note, just like you're a mortgage lender. It's a mortgage. Okay. Typically, if you're going to do what I just did, you're going to end up, unless the deal was cash to acquire the title, you're going to end up in the second lien position, which is still good. It gives you good standing. So, um, so this shows up in a balance sheet, right? So imagine I take $100,000 from precious metals that it cost me 10,000 to acquire. Let's say it cost me 25,000 to acquire 100,000 in precious metals. Now I take my $100,000 of precious metals and I buy, let's say, three promissory notes. So now I have pieces of paper with a lien interest on real estate in a state in Georgia, as opposed to precious metals. It's a different asset, and it's moving more toward being an asset than it was before when it was precious metals. Even though it's not really cash flow, it's kind of cash flow. Now the rental income would be cash flow. Property management income is cash flow. Holding a note with a balloon payment, kind of cash flow, not really. I'm not getting regular cash flow with these notes, by the way. I'm going to get a balloon payment unless someone buys out my position. That's how
And
that
what's
works.
balloon payment?
What's that? Yeah, but it'll be a balloon payment, right?
What is a balloon
Oh,
payment?
I'm sorry. So what'll happen is when I say I financed it for 36 months, let's say that's what I did. Um, I'm not getting regular payments like a mortgage payment. We already understand that he's not going to pay me. He's going to pay when he refinances out that position. And
And
by
that's
that time, see, he's using my money to rebuild the property. So after I put the money down, I went over there. I drove to Atlanta and I literally stayed in the house, the one of the houses that he bought. And then he took me on a tour of what he was doing. So that's what I like to do. It's kind of fun too. See, he's doing all the work, he's got all the contractors, he's the expert on that, but he just needed my money to do it. He could have put his own money in there. But you see, that's not what you do. So that makes me the lender, that makes him the investor. That's my investment as the lender. His investment is doing the work, making it shiny, selling it to the next guy at it probably he's probably going to double or triple his money, and I'll make 8 to 12%. I'm
And
happy with that.
so it's not like you're charging interest, but you said you had a lien interest in
I
it.
do have a lien interest,
But what?
and I'm going to end up with 8 to 12% on that. After 36 months, it'll be more like 12%. And he'll probably make maybe more than twice that. Yeah, probably 40%, something like that. So we're just trying to move money around and use money, right? So that's just one example. Now let me see if I can give you. Here's a characteristic. Let's see. People just okay. So here's what we're looking at. Here's what we do as we're buying precious metals. We like something we can hold that has tangible value, right? You hear this all the time. You don't trust paper promises. So yeah, okay, a promissory note. Okay, it requires the courts and the lawyers and all this if you have to try to do it, but it's a secured interest and you're going to do pretty well. It's not, it's respected, it's negotiable, so it's a good thing to get into. It's different, it has a different feel than holding precious metal because precious metal is money in itself. A promise to pay is a promise for money in the future. So, but it's a pretty good risk. Anyways, we do have to kind of wait, but it's a traditional investment. So I'm not going to get into all this comparison, but let me go through a list now of the types of things that would create a bit of cash flow. Now, you don't have to do what I did and wait for a balloon payment. You can just get some cash flow. And now, when I mention these things, like for example, tax lien certificates and tax deeds. Now that half the country is selling tax lien certificates and half are tax deeds. They're about the same thing. It's a lien interest in real estate on the title to real estate when there hasn't been a payment of the property taxes. Okay. So it's a property tax lien. And the face value of the return on those is governed by state law. So your returns are guaranteed by law. So here's where you're not going to get exactly what the statute says. Like, for example, in Florida, it's 16%. Okay, that's pretty good. 16%. Illinois is 36%. That's crazy, right? Imagine buying a receivable for 36%. But what you're going to do is buy at a discount rate. So you have to figure out what your discount rate is. And then you're going to realize that your return is going to be like 12%, maybe 20% sometimes, maybe half of what the statute is, but it is guaranteed by law. Okay. So that's the nature of tax lien certificates and tax deeds and government created claims like judgment liens. Okay. Which is something different. But tax lien certificates and deeds can be bought through as portfolios through brokers. These brokers go into the our fund managers, they go into the auctions and they just buy up the whole state. Like the state will just sell all of its liens, right, to a one company. And then you come back later and then that company will sell you at a discount rate. So it makes a spread on the difference, but you're still going to make a profit, okay? And then another company can provide a service such as if it's a tax lien certificate, somebody still has to contact the property owner and say, hey, you want to make your payment? I'm the tax lien holder. And you still have to solicit the homeowner to make payments. So there's got to be a service that contacts the occupant of the property. And if you're not successful at getting the regular payments, then you can actually take the property. And that's
Mm.
unusual. It's like happens like maybe 1 to 3% of the time. So you're not really trying to take somebody's property, although it does happen. What you're really trying to do is create cash flow. Okay. That's what you're doing with the tax lien certificates, paper claims on the real estate. And it goes from there. Any questions on that one? Those are good questions, by the way, Elaine.
Thank you.
Okay. And we get into other things like I told you before, real estate notes, right? Promissory notes, seller finance mortgages, performing loan portfolios. If you ask me to do some of this stuff, I'll go find a fund manager and see what the offer is, see what's being sold, right? And then you can look at it. Now, one of the things I look for is the balance sheet. So if I'm going to buy like 7 promissory notes, maybe I have to create my own balance sheet. I want to see what that looks like so I can figure out what my return on capital is, when I'm getting my principal back, when do I get my money back, right? Because I'm using my money as a tool. So that's another thing too. If you think you're investing and you've not seen a balance sheet on the thing you're investing, you're not an investor. Someone else is. Like for example, a 401k or an IRA, you are not the investor. You're the saver. You're the chump who lets someone have 100% risk tolerance on your money when you don't even have 100% risk tolerance. Think about that for a second. And what a clever gimmick that is, because a pension fund you have no claim to until you retire. So someone can gamble it away on Wall Street, which is what they do all the time.
Mm.
That's why you're complaining about your 401ks and whatever, because someone else is making a bunch of money, on your labor. He's the investor, not you. It's a very clever way to get other people's money. I hope maybe it might make some of you upset. All right. So,
It's awful that even the existence of 401ks. I think
yeah. I mean,
you
we have a choice. We could say no, thanks. We can go, do something else. We can, I
don't
mean,
have financial education. That's the problem.
yeah, I mean,
I,
you don't have to do it, but I'm just saying, that's what happens. It's like when I first in the first part of this call, when I'm saying m- choose to be difficult on some things. When I first got before I was at IBM, I was working at this other company. It was like a division of Equifax now, it was an insurance company, and I got promoted to full time, and they offered me all these like 401ks and stuff like that. And I'm a kid, I don't know anything, but I know one thing: if I don't understand it, I don't want it until I learn about it. And so I told them all no. And I was the only person in the whole room. There was like 12 people in there. They were all older than me. I was a kid. And I was the only one in the room saying, no, I just give me my check. I don't want your whatever, what was that called? 45781K. I don't know what that is. So I don't like that. I don't know what this era is, IRA. Anyways, and so my boss called me in her office after I got back because the HR person called my boss and said, you need to talk to John. So she says, John, these are a really good idea. I said, I don't understand them. So I just want my money, you know. So anyways, I didn't even know what I was going to do with my money. I just figured I'm better to have it than they are. I don't know these people, you know. So
Hey,
anyways,
John.
yeah.
Yep, I thought I'd add some 2 cents on the 401k.
Oh, please.
Uh, yeah, there's the actual 401k documentation is, I don't know, could be
The
100
forms say
pages long.
what?
The 401k documentation for the legal documentation that when the laws were laid out is as I understand it's like 100 pages long. And if you actually go through and study them, basically what happened is the 401k plan was a well laid out plan for people to be able to make a retirement, but then the banks got a handle on it. They limited your investments and they did all the work for you and acted as if they're
Yeah.
doing a service. Well, they are
And
doing
that's
a
what we
service,
see
right?
now. Right. And
Yeah.
we're complaining.
So, right. So, really, what it comes down to when you understand the facts behind the 401k, what should have been, you can actually set up your 401k as a self-directed plan, and then you open up to invest in anything you want, like
And that
real
would be the
estate and
exception.
or
If you can make
precious metals.
decisions about where
Yes.
you're allocating the money, that makes sense. Just realize
Yes.
it's under that trust structure of the IRS.
Yes.
So you're kind of locked in that little
Oh,
world,
okay.
but you can defer the taxes
Right.
on. That's kind of nice. Yeah,
Very,
thanks for
very well.
that.
Yes. I just thought
Yeah.
it. Yes, I thought I'd add
Yeah.
that in.
Now I didn't forget. I have this tabbed on my computer. I'm gonna do a screen share on this Caleb and Brown, the 1099. I'm not trying to hold y'all in suspense, but I kind of got into this here. So let me go into so we understand a little bit about, promissory notes, real estate notes, right? Lien certificates, other obligations on real estate. It's a pretty good deal, pretty stable, low risk. There are services that you can have that will manage it for you because you do need to interact with people to get your cash flow. But you can build a nice portfolio. And once you build a portfolio, I mean, you can buy a portfolio, continue developing it, and then sell the portfolio as a business unto itself, just like you were selling a website, right? It has its own balance sheet. So, but here's some things you might want to consider. Now, these terms I'm giving you, you can certainly take those terms and do more research on what that might look like. Okay, now you drive by all these things every day. You walk by them, you benefit from them, and I'm going to share with you what it is. Ground lease, a triple net lease. Okay. This is an example of, let's say, for example, Publix owns, or let's say Target usually owns its own real estate, I think. Target owns its own shopping center, right? And then you see a CVS pharmacy towards the outside near the main road. Okay. With Target, it's the huge parking lot, and Target's way back, okay, at the other side of the parking lot. And the business that's in the front is you got like maybe you got a wing stop, and then you got a CVS pharmacy, okay, or you got a bank or something like that, right? Well, that would be an example of a ground lease or a triple net lease. Well, likely those other businesses are leasing that area, that like acre or two from Target in a triple net lease or a ground lease. Okay. You can invest in those
Why is it called a triple net lease?
because the tenant is going to pay all the bills. That's what it comes down to. All the obligations on the property are deferred over to the tenant. So
And
that way the property owner is relieved of, all the other bills that are associated, right? So there's ground leases, land under triple net tenants, same kind of thing. Pad-based income, they're not structured. So for example, a mobile home park would be an example, but like the new trend is tiny homes, pad-based income. Okay. You can go to a developer and you can work with them on this. Like maybe you can be a second lender or something, because usually a developer is going to have bank money, but maybe he needs more money. So and you can even think about it like this. If you have $100,000, maybe you think for what you want to do, maybe that's not enough, right? You want to team up with some people. We have an understanding of how to use LLCs. The operating agreement is designed for that purpose. You can team up with people and raise up, $250,000, $1 million with just a few people, and you can do some more, interesting things. Um, Land would be something, but remember, you gotta develop it. You can't just buy land and start making money. You got to do something with it, right? You can lease it out. Uh, let's see here. Yeah, so it's describing this. Now, ground lease, land, real estate, commercial land, commercial leases. And then, like I mentioned, this crazy one, which is marinas, okay, for boat slips, marinas. That's a commercial real estate deal. I'm not saying go out and get a marina. I'm just saying that is more of a sophisticated type investment for many of us, even for myself. I would like to get into an out parcel, like for a CVS pharmacy. An out parcel is that little business that's on the outside of the parking lot, okay? An out parcel, ground lease. Um, and then another thing, imagine this. Look at when you drive in traffic, look and see how many people are towing cranes around and heavy equipment to do work on land, not including tow trucks. I'm just talking about like backhoes and things like that, right? Forklifts and things like that. Someone's leasing that equipment. Do you think the company, look at that truck that's being driven around. Do you think the company that's running that operation owns that equipment? In many cases, he doesn't. Many cases, that equipment is being leased because it makes total sense for that company. Again, that's a proper use of capital. You don't own all your tools in many cases. You lease some of them. It makes better sense because let's say, let's say I'm a guy that I can do logging, right? I'm an expert at logging, but I'm not going to own all the equipment. I'm going to lease the equipment because I don't know how to maintain the equipment. If I lease it, the company that's leasing it to me is going to maintain all the equipment. It's going to have all the insurance on there. It's going to have all the maintenance contracts on there. I don't even understand the maintenance contracts. Why the heck would I own the thing? I'm going to have to reinvent the wheel, right? So, equipment leasing is a way to get into some cash flow type operation. How do you do that? Well, what if you went and bought the equipment and then you leased it out? That's probably a simple version. I'm not sure that I would do that. But I would also, what I would do is joint venture with someone who's already doing that. So maybe there's an operation like a Tractor Supply, maybe not the big franchises, but somebody who wants to acquire more equipment. Maybe he's got more demand. He can't keep up with the orders, right? You'd have to shop around for this. And then if you came in there with like a couple $100,000, he could expand his ability to make more money because he has customers that are waiting too long and they're going to other competitors, right? And if you come in there with money, you can then take his same business model, get his same returns or better, and acquire more equipment and be his partner, so to speak, okay, in some way. That's an example of, I've got $100,000, I've got $500,000. Where am I going to put it? This is what I'm suggesting. Look around in your neighborhood and see what's going on. Join the party. There's things going on around you. Equipment leasing, storage facilities. I know here in Florida is a big deal. I could probably put up a storage facility and fill it by the time it's ready. Okay. So there are brand name storage facilities where if you had the land or if you can get a contract on the land, like a long-term lease agreement, you could use someone else's land to put a storage facility. There's a deal that can be worked here, okay? So you don't need a lot of money to acquire the land. You just need to acquire the land in some way. The landowner might finance you a deal so that you can get a storage facility on his land and build to suit, which means you develop his land at your cost. You indemnify him for doing that. And when you're done using it, he still gets to keep the land and the fixtures on the land that you paid for. In the meantime, you built something that makes money, okay? Storage facilities is a good thing to look at, I think. All right. Uh, I'm looking at something like right now storage facilities, but also a place to store recreational vehicles, you know, and boats where people don't get to stay there. Just the equipment, just the vehicles, the trailers, things of that nature. Because some people may not have space at their homes. Now, this doesn't work in every market or every neighborhood, so it's just something you got to be observing here. Okay, I'm just gonna give you some ideas. Um, let's see. Yeah, I don't want to give. And then we get into like we talked about before. So you have the private lending, asset-backed notes, revenue participation agreements. I call them joint ventures. So you're going to use your money with somebody else's resource. Maybe you're going to go in with a business that needs advertising, right? Or maybe he wants to open a second location, but he needs another 50 grand or another 150 grand or something, right? Um, let's see. I don't want to repeat myself here, but that's where I would start looking at. Okay, now my opinion is that these types of things are so well established. The risk is understandable. I'm not saying it's risk-free. It should not be risk-free if it's worth your attention. You want some risk because that's how you make money. But the risk should be understandable and manageable, which these are. Okay, there's plenty of people in these areas of these markets that you can talk with and work with and get things done and understand what you're getting into. Like for example, if somebody came to you and said, "Hey, you got some new money now. Help me build a colony on Mars." Well, who even knows what the factors are for that? It's crazy, right? It's not for people like us. It's for Elon Musk, okay? But we can do things like this. It's been done for centuries, all right? Let's see here. Deeds. So yeah, paper claims, deeds, notes on real estate, and then commercial leasing really, okay? And the use of land, right? Now, I'm not saying you have to buy the land, but if you can buy land, you got to develop it or somehow get some tenants on there and so forth. All right, let's see. Real estate, ground lease. I don't want to see if we, these are the benefits. I don't want to go too far. Okay, so here's some more, just more ideas. You guys have probably heard this. So you got, storage facilities, laundromats, car washes. You can look around and see what kind of business, like for example, I really like the 5-minute oil change places. I like auto repair shops, but 5-minute oil change places are pretty good. Think about what they do. I mean, it's in, out, in, out, in, out, in, out, customer after customer after customer. So the only question is, do you have the customer and is there more competition or does it matter? Because sometimes, like in my town, there's like 5-minute oil changes, like a list of them within about 5 miles, and they're always busy. So, these 5-minute oil changes, anything with auto repair is going to be good just to buy the business. So how the heck would you do that? Let's let's say that business is worth $2 million. Let's just say a 5-minute oil change. I don't know, it's $2 million and you have $50,000. So what I would do is set up a company, call a business broker and tell him what you want to buy and tell him you have $50,000. He might say that's not enough. You might say, well, I think I can make an offer with your help and get seller financing, and I think I can also get the bank to go in on it with me, right? I just went to my bank the other day and I said, hey, what can I give you guys to get me some sort of like approval, not just a pre-qualification letter, that's BS. I'm talking about an actual underwritten approval for a certain loan amount because I want to buy a business in town, is what I told my banker. And she said, "What kind of business?" I said, "I don't know. I just want some sort of, tell me what I can get." And she said, "Go to the Small Business Association website and submit all your documents for loan underwriting, which I know it's going to be tax returns and income statements and all this stuff. And so I could just take my time and do all that. I haven't done it yet, but I'm just saying I could just do all that stuff. So just that's where you'd want to start, right? So now you get your financing in place, you get 50 grand, you get a company set up, you go to a broker, you look like you know what you're doing, right? Because he's gonna look at all that. So he can go to his prospective client because he's going to make a commission on the back end. He wants to look good. You look good. If you don't, he'll probably help you. But still, if you go to him with these things, and you don't need really business credit right away. That's a different animal. We could talk about that sometime. Um, let's see. This is all the benefits. But anyways, I would just start there about, And of course, please call me because, as I talk to you, like in the first minute, I'm not going to know what to tell you. But after like 5 minutes, 10 minutes, I'm going to start suggesting some ideas to you based on what you told me, like where you are in life, maybe your age, maybe your background, things of that nature, what you're willing to do. I've talked to people before that made a lot of money in real estate and they're just fed up with it and they will never even have a discussion with me about real estate. So I have to come up with something totally different. So, anyways, I just want to share that with you, and I hope that kind of guides you all. Just please start with taking your profits. Don't be afraid to do that. Do it the reverse of dollar cost averaging. That's my recommendation. Have an idea of what you want to do. Give yourself 3 to 6 months, and that's still a long time, but give yourself 3 to 6 months. The dollar is tanking like always, but I mean, you see now dramatically, reality is coming. We can see it. But don't be afraid to take the profits. All right. And I'm going to get to this 1099 gimmick. Can I do that, or do you guys want to ask me something or throw in something? All right.
Sorry, I think you're good to
What?
go. I think you're good to go.
Okay. All right. So let me do a screen share here. I love to just make fun of this stuff. All right.
They're saying that in 2026, not only are they going to submit a 1099 whatever, they're also going to give the government your private wallet addresses.
That is so scary.
Yep.
Yeah, because once you have that private wallet address, you can never change it.
Make sure it's empty.
Spend it. I mean, it's so silly. Come on, it's ridiculous. It's trying to scare you. So, what are the new US crypto tax rules? First of all, there's no such thing as a crypto tax. Thanks to the IRS of all reasons. The IRS defined cryptos as property. It's just like gold, right? So it doesn't matter. So wherever you see the word crypto here, put gold tax. Instead of crypto tax, put gold tax. This starts making sense then. In recent years, started paying much closer attention to cryptocurrency. So what? That means nothing. If you filed a return virtual currency near the top of the form, that's because income or capital gains from cryptos have always needed to be reported. Yeah, so what? Because it's gains, right? Disposition of property, meaning the beneficial interest change. We don't care what kind of property. We just call it capital gains from the sale of property. That's what that is. Who cares about cryptos? That's not the law. So report crypto, how your crypto is reported. Then we go here. The IRS is rolling out new reporting standards for digital assets. Okay, now think about this for a second. In 2014, the IRS issues what was it called? Not a letter ruling, some sort of flyer, circular. It said virtual currency or cryptographic currency is defined as property. That was it. So what's this talk about rolling out new reporting standards for digital assets? So what?
Okay, Jay Sterling cited a law that was, and I didn't copy it, that was published in 2021 that anybody, any crypto exchange, I'm not sure, who is doing business with Americans has to report a 1099. And I believe it's like if your transaction is over $10,000. Well, if you've got like $300,000 in crypto or maybe some cash on an exchange.
Yeah, and I'm surprised that Caleb and Brown took so long. And I think it's because it wasn't considered a financial institution, I believe, is what I actually asked my agent over there.
They've
Uh,
been booked.
yeah, and I figured, okay, that's going to change. So what? And so what? I know Jay, he's a friend of mine. So it's okay. But I'm just saying they're talking about digital assets. Assets. So what? It has nothing to do with property. Digital asset. This is not the thing, okay? The property is the thing, okay? This is the type of property, in other words, it doesn't matter.
So with my situation where I'm uncollectible, isn't that going to change all that?
No,
No.
no, this is my point of this whole discussion. This whole article, it tells you nothing new. You don't have to do anything new.
Mhm.
It's the same thing I've been telling you for, forever. I want to make fun of this stuff. So, I mean, look how these throw these words around. Make it easier for taxpayers to work out their gains and losses. It's real simple, guys. It's an algebraic equation. You buy something at a price and you sell it at a price. You buy something at a price, maybe it's many things. Let's just call it a thing, right? At a price, and you sell part of it at a price. You still use that same algebraic equation to figure out your cost basis. So the cash is in, the cash is out. Use your correct algebra. I've got a video on this, 7 minutes long. Don't be scared. You thought you're done with algebra after high school, did you? Not. No, I mean, this is all you need is basic algebra to know what your cost basis is. And yeah, if you're selling cryptos in your name, yeah, you got to pay the tax on it. But just because you're going from one coin to another coin on a platform doesn't mean you have a tax liability. In fact, you do not have a tax liability. Why? Does anybody want to say?
Beneficial interest didn't change.
Thank you. You're a scholar.
No, I'm not.
Appreciate that. Yeah, the guy who cares about it didn't change. He's still there. The beneficial interests have remained the same. So that's the definition of there was no disposition of the property or the definition of not a gain.
What if you transfer all of your property, cash and crypto, to a new broker like Uptrade who does not report?
Well, it's the same thing. All right. So
That
it's a
then
third party,
become
and the third party, and correct me if I'm wrong, the third party is going to retain the private keys when you don't have access to it, right? Okay, and then you're actually not moving from wallet to wallet on the exchange. You're just moving using their software. Nothing's moving. Your coins are staying where they were. As soon as you move it to the Coinbase wallet, it stays in the Coinbase wallet. You're just using their software to make it look like you're going from coin to coin. And then it settles out when you take the money out. So that means that the exchange is the owner of the coin when you put it there, but owes you the money back. That makes the exchange the trustee. It's a trust. So the trading is not being done at all, but it's being done in the software is, allowing you to reposition your interest in the coins with the software while the ownership doesn't change and the beneficial interests don't change, and they're being held in trust for the account holder. That's why they're not taxable. Now, you think I'm making this stuff up? Well, I framed it in such a way, like I'm explaining right now in so many words, in about a one-page legal conclusion, and I sent it to the IRS to ask for an agreement 2 dozen times, and the IRS agreed with me every single time. So I didn't say it, they did. So brokers will be required to report the gross proceeds from your crypto sales on a new tax form. Dun, dun, dun. Ooh, that's really scary. It's a new form. It does nothing. It's just information. So what? It's reporting. If you don't like it, use a limited liability company, use it as a fiduciary, pass through, whatever, and you won't have a problem. If you don't mind paying the tax on it, well, then so what? It's just, I'm going to tell you right now that 1099 is likely going to be erroneous. So you should understand that and know that you can correct it. You can actually correct it on your tax return. That requires special accounting skills. I don't have them. Some accountants understand how to do it. I don't know if I trust them. It's up to you. You might have an accountant that knows what to do. So the 1099 is a record of the proceeds. All right. So they're requiring to report the cost basis. You should be diligent about this. Look, if you want to avoid this drama or help yourself do that, use their services for liquidating. So you use their services for acquiring the coins with cash and then liquidating, right? So when you allocate, don't use their services. Use your own wallet, like Atomic Wallet or one of these other ones on your own computer, and allocate, right? And then when you're going to liquidate, then go ahead and do that. Then all this information is useless, okay? Anyways, reporting rules apply to brokers. So it's about taking custody, okay? That's who's required to report. The new regs do not currently apply to decentralized non-custodial changes. Yeah, because they can't enforce them on those that never hold your assets. So use traditional investment platforms. You might be familiar with tax forms. Okay, so you have a copy. So everybody who's going to deal with Caleb and Brown and anybody else, that you're going to get a 1099 electronically. that they're required under the regulations to do this. It's like 60/50 or something like that. Yeah, they do it. So just be aware. And it's a nice record keeping. It's probably incorrect, but at least it may have give you some information. But just hang on to it. I'd recommend using an LLC and not have that problem. Now, like I mentioned before, hopefully I can have a solution for y'all if you're moving large amounts of money or something. Maybe we can come up with a pretty good solution that's outside of this. So if you're allocating on your Atomic wallet or something, or Exodus, or your Ledger or BitFi, I've got a couple more still here. Your BitFi, maybe when it's time to exchange it, if we have the service set up, you could just do the KYC with our software, and then we let you get it. We give you access to the bank, and you can do your transaction, and they'll just charge you a fee. So reasonable fee. Anyways, so that's all I want to cover there. Looks like we made it in under an hour. So I hope that gives you some ideas, and this is a subject where for allocation, I mean, we could sit here for 3 days and talk about things. I mean, I didn't want to go into too much detail, but we can get into what to look for, like gross rents and net present value and discount rates and things like that. Those are important things to consider. And then how do you come up with the accounting? Like, for example, maybe you get the financial statement and you want to have a new accounting done. You have a bookkeeper do it or somebody. Your broker may know somebody. If you go through a broker, he has a supply chain of people. So sometimes you want to go through a broker because he's already got people. Why should you try to find all these people when your broker knows all the people that are right for what you want to do? That's why when you go to the broker first and he creates a profile on you as to what you want and what you're qualified to get, it's much easier for your broker to make an offer. So that's just one example. So if you're going to work with me, I would actually create a strategy that you can use and then work with you on that strategy.
Hey, John, have you got something a little bit off topic? I have a question off topic.
Yeah, yeah.
Well, I'm just looking at the crazy crap that's happening right now in the world, like the JP Morgan short and silver
Yeah.
forever, and then you look at it, and today, although no one knows about it yet, the Chinese redeemed all of their U.S. holdings, just a bunch of it. They just redeemed them all, and so the outlook is unpredictable in terms of what's going to happen. But the Fed's hands are tied a little bit. They can't really raise interest rates. They can't spend more money. It'll drop the value of this and increase rates and all kinds of other crazy things. I know it's something that we can control, but what's your take on that
Well,
whole thing?
how much was sold? Was it sold back to the United States or was it traded
Yeah,
for something?
sold back to
All of
the,
it to the
yeah.
United States?
It went back to the bond market.
Okay, so that's the US bond market. Okay.
Correct.
How much in
All
dollars?
of it. It was billions. Like I forgot the number. I looked at it. It was like billions, 1.9
Because they
billion
had
or
like
something.
2 trillion and they were down to 0.6 trillion or 0.67 trillion.
Whatever it was. But
Did they get rid of
they
0.67
redeemed
trillion?
all of it.
Yeah,
They
so
tried to redeem
what
all of it.
what does that do though? I mean, I think that isn't that like a huge devaluation of the dollar, like very inflation.
Correct. Right. Yeah, that's what I think too. And I'm just wondering, no one's talking about it till tomorrow because no one knows it happened till today.
I
I just
think
happened to be
that
looking at something
I
and I
think
saw
that
it happen.
China's fed up with them keeping the price, manipulating the price of the precious metals for decades, and now they're
Right.
going to do everything they can to jack it up as fast as they can. I think
Right.
China's wanting to do that. I don't blame them.
So in terms of your remarks on gold and silver, do you want to be in land? Do you want to be in metal? You want to be in metals? Do you
I
not want
think
to be
it's
in
time to
metals?
sell. I would not recommend riding it to the top because you're never going to find the top.
Yeah.
You
But 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 but
sell,
but
yeah.
historically, if you look, silver was at 50. And so in order for it to be at parity with inflation, it has to be to $251 before it reaches
Well,
is equivalent to $50 that it
if
was,
you're
right?
smart enough to figure that out, then make your play. Make your
Okay.
play. I'm not here
Okay.
to tell you that because I'm not that guy. You might be, but yeah, I mean, I would just recommend take your profits when you see it's time to take some profits.
Okay.
I mean, I just have this like shell shock from decades of them. I'm thinking, yeah, it's gonna be $1,000 an ounce, then all of a sudden they yank it back down to $18 an ounce.
Yeah. Yeah, I
It's
understand.
so I have like seizures when I remember that, trauma. So I'm just saying, take your profits. I mean, don't
Yeah.
don't be
Yeah.
crazy and thinking you're going to try to make 1,000%. For what purpose? Take your profits and do something good with it. See, a lot of people are so happy that they can take their profits and they can avoid the tax on it, and they think that they've arrived. You're so far away from doing anything good with that money. You want to spend it as quickly as possible. What? I just made a bunch of money in precious metals and you're telling me I have to spend it as fast as possible? Yeah, it's on fire. You got to buy something that pays you. So buy something that makes some money. If you're not going to buy something, then go in with someone else who already did and put your money in his deal. Yeah. Have a broker help you with that.
Well, thanks for the insight. Appreciate it.
All right. Thanks for the question. Elaine, what'd you think?
Um, wait a minute, hold on. Oh, I'm on. Okay. Yeah, with all of the technology that is coming out that is dependent on silver, I think it's going to go a lot higher, John. I mean, some people are
I
saying,
don't know, Elaine. I don't know. I don't think so. I think you're way off on that one.
well, I
I
guess
think
we'll
no, I
see.
think that's no, I think that's a common understanding. I mean, that's the understatement of the year.
He's
I
pulling your
mean,
lariat
shoot, there's no end. There's no end for the demand for silver.
over. Yeah.
Yeah,
And
oh my God,
there is
you're
a
right. I
short,
mean,
it's a
but
shortage
still, I
of
mean,
supply.
how long are you gonna hold it? How long? How much money do you need to do
I
something
just,
else?
I'm just using it a little bit at a time as I
Yeah,
need because
yeah,
I'm still, I'm still living on Social
yeah,
Security, but there's
yep,
some things I need.
yep.
I'm not buying a Lamborghini or one of those
Good
things.
for you. Yeah, probably not a good idea.
But this whole thing with the Calvin Brown thing, the there's no way if they issue a 1099 in my particular situation that I'm not gonna get in trouble with the IRS.
Well, if you have a 1099, it's just going to show income, and you should be filing tax returns. And you need to resolve it on that tax return. If you're doing that in your name, I recommend not doing that in your name.
Yeah, I didn't get the thing set up, so it's in my
Are you
name.
able to do it?
Like right now. You mean I'm gonna try to do it like this weekend? Yeah.
Okay. Well, let me know if you need some help, but it's very good for you to do that. Now we can explain it away, but I'd recommend doing your allocation in an atomic wallet or something on your computer. Don't do it on the exchange. When you're buying and selling your coins, do it through, you know,
An atomic wallet.
yeah. Just download the software on a computer that's secure or Exodus or something. That's your better way of doing it. You can even use a Bitfi or a Ledger if you like. Just don't allocate on the exchange. But we can correct the 1099. Just let me know before you do something.
Okay.
Yeah, let me know.
Yeah.
John.
Yes.
Hey, I'm just curious, what did V have to say about silver right now?
I didn't talk to him yet, but he'll probably be like us. They'll say it's going to go through the roof. I mean, of course, that's an easy call. I
Got
haven't
it.
we've been so busy this whole month. We just, hit the ground running in January, so I haven't
Right.
even had a chance to talk to him.
And then January's gone.
Yeah. I gotta call him like tomorrow. Yeah. Well, we gotta set this thing up because we have access to a money transmitting license and without actually being the licensee. So
Money
uh,
laundering, huh?
yeah, we can work with y'all on this stuff. So
Just a couple of questions, John. Will this recording be posted?
yeah, I'll publish it.
Okay.
There's no edits here. I'll just publish it.
Okay.
Okay.
And
On
is
Telegram? On
Yeah,
tel
yeah, I'll give you the link on Telegram, but it'll show up on YouTube.
Okay.
Did you guys
and
like that one I put up on I published on the Lawyers on Crack comment?
I didn't see that.
All right. It's on the YouTube. I was comparing the AI wizard with the Lawyers on Crack. All
then
right.
just two related questions. Is there an update to the LLC that someone got from you 4 years ago, or is it the same?
It's going to be the same. I mean, I've revised the operating agreement. It's still going to be as effective as the other one. But in fact, what I'm going to do, because I did that trust class on last Saturday, I want to do something new on not this Saturday, but afterwards. But I will have a class and it will be in a video series. The one that we already have, I think it's like $97. I'm going to give you a tutorial of the operating agreement, the latest and the greatest. I'm going to explain all the provisions in there and I'm going to throw some new things in there. Okay, so that's coming up. I don't know when, maybe next month, maybe in March. After this Saturday, so we're looking at what, the second week of February. I'm going to talk about the postnuptial agreement. That is, something it's too much overlooked. Nobody talks about a postnuptial agreement when that's like the biggest financial risk you can have in this life.
Mm,
It really is. And it's
mm,
not about trying to preclude the husband or wife from access to money or property. It's literally about preventing the state from intruding upon
Yeah,
your life,
exactly.
even post-marriage. You don't want the state intruding on your life. And so the postnuptial agreement that I've written is designed to exclude the state. That's why I call it divorcing the state. Exclude the state from your marriage. So I want to explain all this, and I'm going to give a course on it, and you'll see it's quite complicated, but I believe it's going to be very useful. It doesn't have to be that complicated, but it and anyways, it's rock solid. It's really something that should be integrated into all your other considerations about financial risk, is the way I look at it.
And then quick question, what would be the procedure after getting the 1099 if you have the, Singleton LLC?
Well, that
The
if
LLC.
your LLC's got received the 1099, just I like to keep them in a folder. I have a folder called the name of my LLC,
Mhm.
and then inside that folder I have the EIN approval letter, and that's the file name. The EIN is the file name. So that way, if I have to look it up, it's right there. And then when I get a 1099, I just put 1099 what DA 19 or the year 2000 whatever, however you want to do it. But yeah, I save them. TG, what did you want to ask something else?
Oh, hello. Oops, sorry, can you hear me?
Yeah,
Yeah, good,
yeah,
right here.
yeah.
Just quickly, a couple of questions, just relating to what you, one of your other questions there with the swapping the crypto out using the atomic wallet or something similar. Would a DEX be something also that would do the same job as your?
What's it called?
Oh, a DEX, sorry, decentralized exchange.
Yeah, that's the same
Like,
idea. It's the same idea, right? It's not
same
something
idea.
someone's going to report on you. So sure, decentralized is fine. Just be careful about
Yeah.
these decentralized because sometimes they set you up and they try the same thing that the exchanges are doing. They're lying to you about KYC and things of that nature, or
I'm
whatever they
moving
do.
well.
They're not accountable to
I'm
you, so
like,
be careful about them.
All right. And
your
I've written in the
grasshopper.
chat, if I don't suppose you would be ever holding the trust class in the afternoon.
Oh, well, the
Or
trust class
consider.
that I did, that video is available. It's a 3-part video, and I'm going to do another one. So the reason why I do it 11 Florida time is for the people in California. So you're
Yep.
in where you're out of the country, you're in Australia or something?
Yeah, Australia, it's 2 a.m. or something for us.
Okay, so you're 6 hours ahead of us, maybe.
Yeah.
All
If you
right,
did it at 4 p.m. or 5 p.m., that's about 6 a.m. or 7 a.m. for us over here.
I see.
Would it be
Yeah,
best just to
I
watch
could do
the
that.
recording or
I just find that people are more available in the morning, so we'll try to come up with something. I mean, I know you want to be on the live one, so we'll
okay.
try to do that. Yeah. It'd help if we had more people in Australia. Not to just say one's not enough, but yeah, that's something to consider. 4 or 5 o'clock in the afternoon might work. Yeah.
And
Right.
last Saturday's class is available?
It is available if you go to aceofcoins.club. It's
Mhm.
called John Jay's Irrevocable Business Trust Fortress.
And could you just briefly say why it's different than the PMA?
Well, it doesn't describe a PMA. It's a way to hold property without being the owner, without disclosing the beneficial interests, and do your banking so quickly and do it by yourself without needing to have another person. Oh yeah, it's very well respected. This way this is written, it's rock solid. Uh, I have my same strategies or similar to the ones that I use in the LLC, but because it's a trust, I get a little bit more in there. So, but yeah, you'll see. Um, you can't break it. It
Like,
excludes the rest of the world. That's what you want.
oh, I could use that with Caleb and Brown.
You certainly can use that with Caleb Brown. Yes, the trust. Yes, use it. So if you go watch the video, I watched all three, and I'm gonna do another class and probably 2 or 3 more videos. Okay, that class will be broken up like that. So if you watch the right there, and then you download the actual trust agreement, and just really pay attention to the video and go through the trust agreement and see if it's gonna fit the use that you have. Revise it as you need to, and then go ahead and use it. You can use it just like you would an LLC in an operating agreement.
And it's more protected than the LLC.
you've got the same protections. They're just different ways of doing it. I like this trust. I mean, I'm going to show you how to use the LLC in a way that you don't have to disclose the BOI either. I'm going to show you how to do that too. I've never shown people that before, but I wanted to introduce it in this trust instrument because people like trusts. So I figured, what the heck? I'll write a business trust with the caveat being, please watch my videos and learn how to use it for real. Just because you have a piece of paper doesn't mean you're saved. You got to use it the right way. It's just like these people that are using, they think they have a tax exempt organization, but yet they're the only person associated with the organization. And all they're doing is retitling their property and they're acting as if they have some sort of charitable purpose and they're just self-dealing. They're just going to get in trouble and there's no exemption at all. They're just going to get in trouble. So you can't abuse something. You can call call something a thing you want to call it. You could say this is a church. And if it's not really a church, you're going to have a reality check in the near future. It better be a church. So if you have an organization that you think is a tax exempt organization and you don't have an approval from the IRS and you're self-dealing, you're in big trouble. So be careful. That's why I want you to watch the video. I want you to use the trust properly.
So you cover all this, John, in
Oh
your
yeah.
in
Oh yeah.
yeah, all
Yeah.
this. So we can stand in our we know how to stand in our
Exactly.
shoes.
I want you to be able to use it correctly. I'm scrolling through. There's so many comments here. I'm sorry I'm missing you guys here.
No,
Can
I've been
what do you mean by
monitoring.
self-dealing?
You're caught up.
Self-dealing. Here's an example of self-dealing. So I set up an organization and I proclaim it's a tax exempt organization, however I do that. Okay. Even I get approval from the IRS. It's tax exempt. I could do that too. And then I'm the only person. There's no board of directors associated with this thing. I open up a bank account for it. I'm still the only person interested. Let's call myself the owner or the beneficial owner. I know. Okay. So then I put money into it. Let's say I take money out of my personal savings account that I got from my job and I put $10,000 in it, right? So now it's got its own bank account. And then I take that $10,000 and I claim it as a charitable contribution on my tax return.
Oh, and you gave it to yourself.
Then I spend the $10,000 to pay my credit card bills.
Oh,
That looks like it's time to go to jail.
sounds like Somalis.
Yeah, exactly. And too many people are doing this right now. So that's why, I'm very cautious and I haven't for many years produced any of this stuff because the LLCs are so effective. Why change it? But I think we can do it if you'll be serious and watch these videos and learn and use it correctly. Then you have to use it in the way you're describing it and the way it's written. It has to show up that way.
There's a
Because
lot of people over here in Australia who are we don't have the LLCs as much over here, but trusts are really, really big. So I've got a big circle of
this
people that are,
trust will be perfect in Australia. Now you can do the same thing with a limited PTY, I believe it is over there.
yeah, to a
You can do it,
degree.
but you got to understand your joint stock. You got to understand how that's written. So that's a little more complicated. But the trust, the way it is in the video that I produced, you can just use it, download it, and use it. It's perfect in Australia. Just have to change the jurisdiction in there. Yeah, it's
Cool,
right to
thanks.
contract. Yeah.
So people are just wondering, can you use the trust to collect rent?
Yeah. You can collect rent. You can own a hotel with it. You can borrow money with it. You can even get credit with it. By the way, don't just go get credit with it. I'll show you how to do that. There's a way to do it. It's not what the bank tells you. But yeah, you can do anything with the trust that you can do with an LLC or individually. You can even sell shares. You can even do a private placement with the SEC and your trust and sell shares and raise $1 million in your trust.
Wow.
What the heck?
You can do-
Imagine if you just made from selling your precious metals, you're so happy you just made $500,000, right? You set up this trust, you fund the trust with $500,000. So you got cash sitting there, it's on fire, it's in the trust account, and then you do a private placement memorandum and you raise another $2 million. Why not? Because you're going to buy a shopping mall. So you need $2.5 million, right? Why not? You can certainly do that. It's a business trust. It is for business.
Yeah.
If you're going to do that, I'd recommend having a board of trustees. I can help you with all that stuff too. Because I mean, right now I wrote it so one person can do everything, and you can do one person do everything. But I'm just saying, if you're going to get serious about some asset acquisition, have at least 3 people on your board of trustees and designate that in the trust instrument, and have meetings and minutes and all this jazz. Yeah.
What about having an unincorporated association as the trustee for this trust? Could that work?
Okay, that's fine. Just make sure there really is a separation, that there's a trustee where there's loss of control with the trust assets. And yeah, sure, you could do that, but I don't see why you need to make it that complicated. I would just have a board of trustees run the trust. You can have, I don't know why you want to have an unincorporated association run the trust, but I mean, you could. Yeah. The way I have it written, you'll see if you see my video, you'll see there's a couple of little tricks I've got in there. So
Great.
I think you'll like them better than having like layers of things, like have an association be your trustee. I think you're gonna like my idea better. You'll see.
Excellent.
Yeah. Yeah, in the video section. So Jim is explaining so yeah, so if you look in the video section in the aceofcoins.club, I think Jim used the phrase class exercises for the documents. So just kind of look around the page there. It's like towards the bottom right. You'll see that, and you can download the trust document.
Yeah. Yeah.
Yeah, if you guys want to do it, I mean, I can even do a class on how to create credit for your trust. I mean, if you want, I might charge a lot of money though, but if you want, I can show you how to do a private placement too. You just got to remember, okay, so it's paperwork. That's not your solution. It's paperwork. If you want to do a private placement, you need a marketing program so you can solicit people that would invest in your trust. So it's not about just, I can show you how to do it. You really want to have a way to bring investors in, okay?
And could you mention the YouTube channel that has your videos?
Yeah, the YouTube channel, I mean, if you search on YouTube for Ace of Coins, Jim, isn't that right? You should be able to search on Ace of Coins, right?
100%.
Yeah,
And
okay.
strategic life too.
And
It's on
strategic line.
YouTube and it's on
Yeah.
Rumble, right?
Yeah.
Is privacy fight still up?
We're trying to get rid of it. I mean, it's kind of lingering out there somewhere.
Yeah, you're not uploading the new stuff to that.
Yeah.
Right.
I mean,
And
yeah, it says
more
Ace of
interesting-
Coins on the YouTube channel. So let me see.
No, privacy fight's gone. Don't promote it. It's gone.
Yay, don't
It's
promote
out of
it.
here.
Yeah. We're
What
sure.
domain's gone, it's out of here. We can't
Yes.
see anything. We don't know anything. It's gone.
Yeah, so just search on Ace of Coins.
and YouTube and Rumble.
Yeah. France, huh? Very, very interesting. Okay. All right. Well, thanks for sharing that, Teresa. Well, y'all enjoy your weekend. I'm gonna
Yeah, you too.
Thank you so much.
go back to work now. I don't sleep, I don't sleep.
You
I'm
don't
gonna
eat, you don't
resume my
sleep.
working day right now.
Oh,
All righty.
Okay.
Appreciate y'all being on the
Bye.
call.
thank you.
Nice weekend.
Bye.
Thank you, John.
All righty. Bye-bye.